Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be going through Games Workshop stock. I'll be using fundamental analysis via TIKR terminal to go through the financials, and then I'll be putting the numbers into my DCF to come to a fair value of their stock. Let's get straight into it. So who are Games Workshop? So Games Workshop Group, abbreviated to GW, is a British manufacturer of miniature war games based in Nottingham, England. Its best known products are Warhammer, Age of Sigmar and Warhammer 40,000 or 40K. It was founded back in 1975 by three blokes, and they originally were a manufacturer of wooden boards for games including backgammon, Nansman, Morris and GAW. Later on it became an importer of US role-playing game Dungeons and Dragons. And then they created their own brands through Warhammer, etc. And the company itself is listed on the London Stock Exchange and it's constituent of the FTSE 250 index. Now let's have a look at the sales for Games Workshop, and we'll start with the sales per business. So it's broken down into three different sections of this company. So trade, online and retail, 55%, 25% and then 20%. Sales per region, so 41% of the sales come from North America, 23% from continental Europe, 23% from the UK, 7% from Australia and New Zealand, 3% from Asia, and then the rest of the world makes the remaining balance. Now let's have a look at the financials via TIKR terminal for Games Workshop, and we'll start with the income statement, of course. 5 years worth of data. Let's go for it. So, 2022's figures will come out when it should be 3 months after the year end. So what's that? June, July, end of August time. So I might do an updated video in August for Games Workshop when their yearly results come out. We'll go from here. So over the past 5 years, the sales have more than doubled. Fantastic stuff. Profit wise as well, they've quadrupled the profit in 5 years. What can I say? It's just epic stuff, really. Shares have remained pretty flat, increased by a very small amount. That's probably in place stock options once again, but can't complain there really, let's be honest. Right, onto the balance sheet. Cash balance is going up, love it. Makes sense as the business is growing by quite a bit. No long-term debt. Wow. Oh my god, no long-term debt, and the only debt is capital leases, and I don't really class them as debt because that's just my view, but capital leases, £40 million worth. They can pay that off with this free cash flow. They can pay that debt off in less than 6 months, so it's not a big deal really. Alright, we'll stay on the cash flow statement then because there's not much debt, there's not much to talk about on the balance sheet really. It's just a pretty decent company. Free cash flow is cash from operations minus capex. So the capex is pretty, doesn't increase that much, but when the cash from operations has been ramping up massively. Last 12 months has decreased a little bit of a concern, and that's maybe why the share price has fallen in half over the last year or so. But that it doesn't mean the company's dead though, does it? Even if it's producing 109 million of free, minus capex, of free cash flow, even if it's doing 80 million of free cash flow, still looking like a decent business. They do have a dividend as well, which are increasing, which is epic stuff. We're paying a little bit of the debts. This is definitely employee stock options as well because of the amounts involved, so not to worry. Go to the ratios now, my favourite bit of this analysis. Return on capital, bosh, look at that. That is epic, is that? Some of the best returns on capital going. There's not many companies which can beat this. High margins across the board. Net income, free cash flow margins as well, love it. Current ratio is way above 1. The CCC is near 60. In the last 12 months it's actually been negative. We love that on this channel. Total debt to capital as well, a very small 17%. So it's looking very high quality so far. We'll continue with my analysis and we'll see what we come out with. But if you want to use TIKR, link in the description down below. Use my link, join TIKR, have fun analysing some companies. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you there. Now let's have a look at the genuine impact stats for Games Workshop, and we'll set up the quality metrics, and across the board it is looking very, very good. It's got that shield around it, 280, so it's one of the highest quality stocks on the platform. Profitability very high, financial strength strong, capital allocation very sound, love it. Value wise, it's looking expensive, but then the cash flow is looking cheap. I don't think this one makes much sense in my view, but the cash flow looks cheap, I'd agree. But the income statement balance sheet looks expensive, so I'm not sure what's going on here because you expect these to be pretty similar, but maybe I have to have a look into it a bit more. Historical growth, very high, agree with that completely. The business has ramped up over the past 5 years, and like I said before, that little shield around the quality metric, one of the highest quality stocks on the platform. But yeah, some interesting insights there from Genuine Impact. Now let's have a look at my analysis checklist for Games Workshop, and the company itself is a 2 billion market cap, current price is £63 per share, P ratio is 17, earnings yield is 6%. So first pillar, profitable, high returns on capital using low leverage. I want my companies to be profitable, high returns on the money invested in the business, and using low debt to do this. These three things combined, in my opinion, just shows high quality, simple as that. Return on capital, as we've spoken about, 68% 5-year average, awesome stuff. Probably the highest from the companies that I own / want to own. Full disclaimer, I own these, I thought I'd just put it out there anyway. But gross profit margin is 70% 5-year average, very high. Net profit margin as well, 27% 5-year average, lovely. Free cash flow as well, not too bad at 18%, a little bit different, but we can cope with it. Current ratio 3, CCC 67, so a little bit higher than the 60 days I want, but can't complain. Total debt to capital is 19%, so yeah, that's really, really good. Not much debt at all going on. Proven ability to grow, as we've seen, high growth across all stages of the business. Great capital allocation wise. We haven't really done much in terms of capital allocation, we've just sort of grown the business, so these red marks are a bit mean, but we have to have some sort of evaluating, don't we? So long-term debt, the capital leases have increased to 40 million, shares outstanding 1, good acquisitions, minimal, probably some sort of little write-off, dividend growth has been there. So they're really harsh, but it is what it is. 73% overall. I think it should be closer to, it should just have 1 red, but it's what it is. We have to have some sort of line somewhere, drawn line in the sand. So P ratio of 17, price free cash flow 18, it's looking decent. So DCF for a 10% return, we're looking at £67 per share. And from the current share price of £63 a share, yeah, for a 10% return, it's looking like a buy, and it's looking like a decent deal. So let me just show you something as well. Before the DCF, actually no, I'll show you the DCF, go for it. So for DCF, so my DCF assumes that free cash flow going into the future is going to remain at a decent rate, not growing too much, but pretty solid overall. It's still quite a small company, and it's probably still got a lot of room to grow. So yeah, £67 per share, we'll take it. But let's have a look at the share price, because I don't usually do this, but it's something I'm going to start adding in when I do my analysis. 1 year chart, so it's now a buy, but look at it. It used to be horrifically overvalued, like in 2021, and let's have a look. Basically since September 21, it has dropped 48%. So if you bought here, you've lost 48% of your cash. So stocks can fall, stocks do fall when they're overvalued. And I did analysis on this company, it was in 2021 actually, I think it was November time I did analysis on Games Workshop, and at the time I thought it was overvalued, but now it's not. It's now in the wheelhouse, and if it gets even lower, it's going to get very, very interesting, because I'd like to buy some more shares, to be totally honest, have this high quality business. let's see if we can. Let's see if free cash flow remains at 115. Let me just pop these in. What does the share price come out? Oh, I've absolutely ruined that. 115, 115, 115. Boom. What does the share price come out at? 46. So if you think free cash flow is going to be flat, you want to be buying this at 46 pounds per share, so it needs to drop a bit more. It just depends on what free cash flow you're estimating. I'm estimating the business is going to keep growing. Could be wrong, but if you could buy this probably below £50 per share, it's probably an instant no-brainer. I think at these current levels it's not too bad, but who knows? Could be wrong, but we will have to see. Let me know your comments down below if you own Games Workshop or have any experience with Warhammer. Are my assumptions completely stupid? But yeah, just let me know in the description down below. So there we have it. That was my full stock analysis for Games Workshop. And if you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.